There is no good news like bad news for NFTs, and it would seem as though NFTs' long-term hopes are being squandered by the fact that the market just isn't all that interested in it, with recent reports suggesting that in the current state of things, the NFT market seems to be collapsing, as highlighted by Jesse Felder here in the following tweet that also links to this Wall Street Journal article that we'll take a look at in a second. But here's what Jesse Felder tweeted. The NFT market is collapsing. Sales fell to a daily average of about 19,000 this week, a 92% decline from a peak of about 225,000 in September, a crash of about 92% in just a couple of months. If that doesn't spell out passing fad, I don't know what does. The tweet continues. Active wallets fell 88% to about 14,000 last week from a high of 119,000 in November. This is a direct quote from the Wall Street Journal article titled NFT sales are flatlining. Is this the beginning of the end of NFTs? I certainly hope so. While I guess you never know down the line if for some reason NFTs make some kind of revival. In the current state of things, it's looking like this fad is something that people are no longer as interested in, given all of the reports surrounding it, the scams that are commonplace, the crimes that are constantly occurring, the theft of not only artwork, but of NFTs themselves via hackers who go in there and just wreak havoc. It is just an environment that's rife with shady activity and ultimately offers very little in the way of benefits, very little in the way of things that we can't already do with other forms of technology. So here's what the article states, insisting that the NFT market is collapsing. They share the same data we saw in that tweet, and this was information that they got from data website Non-Fungible. And then scrolling down here, you'll find a graph that shows the number of NFTs sold daily based on nonfungible.com's data. And you can see right here, 2001 things were pretty lean, but then we see this huge spike throughout mid to late 2021, all the way to late 2021, and then boom, this huge crash that happened around November, and then a little rise in January 2022, but it's kind of fluctuating in the mid to low tens of thousands, whereas before, at its peak, we were looking at hundreds of thousands of daily NFT sales. To further highlight the decline of interest surrounding the NFT market, the Wall Street Journal highlighted a number of instances where people who placed their hopes on NFTs were left with the short stick. Many NFT owners are finding their investments are worth significantly less than when they bought them. NFT of the first tweet from Twitter Inc. co-founder Jack Dorsey sold in March 2021 for $2.9 million. The poor sucker. Mr. Stavi put the NFT up for auction. He didn't receive any bids above $14,000, which he didn't accept. Congrats on your valuable investment. He bought this JPEG essentially for $2.9 million, was hoping to sell it for a lot more, but instead found himself almost $2.9 million short, or at least he would have had he accepted the $14,000 bid. Instead, this individual essentially just threw $2.9 million down the toilet, flushed it real good. Here we have another example where somebody purchased a Snoop Dogg curated NFT titled Doggy number 4292. In early April, it was worth about $32,000 worth of cryptocurrency, but the highest current bid for it is 0.0743 Ether, which is just worth a measly $210, which barely registers in the amount of $32,000. This individual might as well be $32,000 short. Something else the Wall Street Journal brings up is Google Trends and just searches surrounding NFTs and what that data reveals about the interest surrounding the NFT market. And the way the Wall Street Journal article put it is that interest in NFTs measured by the number of searches for the term peaked in January, according to Google Trends, and has fallen roughly 80% since then. News outlet Forbes reported something similar back in March of 2022. Editor Paul Tassi tweeted, interest in NFTs and metaverse is falling fast. And looking at the article with that title and scrolling down, you'll find the graph here in question that shows the trend spiking up and then plummeting. And I can actually pull this up myself. Going to Google Trends right now, you will see that very same graph here. There's been a slight uptick recently, but not much. In general, NFT interest is at an all-time low since that big spike back in late 2021. Now, there are NFT bros out there who are refuting the data from nonfungible.com. Tom Schmidt, for example, tweeted the Wall Street Journal just published an article claiming that NFT transactions are flatlining, which appears to be totally based on incorrect data from nonfungible.com. Compared with on-chain Dune Analytics data, did no one bother to check primary sources? Also, why not dollar volume? Basically attached a number of screenshots trying to present the NFT market as being more stable than what reports are saying. But the thing is, the falling trend of NFTs has been reported long before now. For example, here we have an article from March 10th, 2022 from news outlet FT.com titled "The Great NFT Sell-Off Has the Digital Collectibles Craze Hit Its Peak." And there are a number of circumstances that this article highlights that indicates that NFTs are a dying trend. In the sub-headline, it is highlighted how the value of digital tokens dropped by almost 50%, renewing doubts over hype-fueled market. And then scrolling down, you've got some key bits of information worth keeping in mind. NFTs have plunged in value as real-world conflict and broader cryptocurrency slump begins to unwind. Several animal collections, including Bored Ape Yacht Club, Cool Cats, and Pudgy Penguins, spiked in price, aided by celebrity endorsements and social media hype. By the end of 2021, nearly $41 billion had been spent on NFTs, almost as valuable as the global art market. But this was certainly not a spike that stabilized and stayed at that level almost as rapidly. Large portions of the market have begun to deteriorate, leaving novice investors with big losses and raising questions about the long-term outlook for NFTs. Average selling price of an NFT has dropped more than 48% since a November peak. Daily trading volumes on OpenSea, the biggest marketplace for NFTs, have plummeted 80% to roughly 50 million in March, just a month after they reached a record peak of 248 million in February. So again, just a huge crash indicating that the NFT trend is a momentary viral sensation that people are very rapidly moving on from. And then referencing nonfungible.com, this article talked about how the number of accounts buying and selling NFTs on a weekly basis has fallen to about 194,000. This was from a peak from back in November of 2021 of 380,000 accounts. But it doesn't stop there. The average price of a Bored Ape NFT, considered among the most valuable of NFTs in terms of how much money people are paying for this kind of crap, has fallen 44% since the war in Ukraine began as investors pull back from trading colorful cartoons. The NFT index offered by Bitwise has fallen 25% in the past month, down 17.1% for the year. A month prior to that article, the Financial Times also released this one back in February 14th, 2022, titled "When You Count Users Instead of Dollars, the NFT World is Tiny." Similarly to how when you actually look at the number of people who heavily engage with microtransactions and loot boxes, we're actually looking at a small minority of players that companies exploit, and game company leadership base their decisions surrounding that minority of players who make them the most money, rather than on what the majority of players and customers want out of video games. And now that's happening with NFTs, where the majority of people are telling them NFTs suck, we don't want this in video games, we don't want NFTs normalized, period. But companies insist that this is the future, that we just don't get it, but one day we'll see, we'll have some kind of epiphany about why NFTs are so fantastic and how beneficial they are for us, when all companies are doing is selectively listening to a minority of feedback that has the most potential to make them the most money and ignoring all of the negative dissent and concerns surrounding NFTs, a landscape that is just rife with scams, theft, crimes, hacking, and on top of that is bad for the environment while offering nothing of true value outside of potential additional monetization avenues for these companies. And now companies who jumped on this bandwagon have to contend with the possibility that the NFT market may very well die in the not so distant future. Companies such as Square Enix, who the other day were talking about how they sold off a bunch of valuable Western studios and IPs, Crystal Dynamics, Eidos Montreal, and Square Enix Montreal, and alongside them IPs like Deus Ex, Tomb Raider, Legacy of Kain, among many others, so that they can focus on the launch of new businesses by moving forward with investments in fields including blockchain, aka NFTs, AI, and the cloud. Just some great timing there that a number of outlets are already going out of their way to highlight, like Kotaku here, who published this article titled NFT Market Collapses Just as Square Enix Sells Tomb Raider to Bet Big on Blockchain. Scrolling down through the comment section of the tweet linking to the article, you can see that people are either making fun of Square Enix for how their greed has led them to a less than ideal situation, or just celebrating the fact that NFTs are collapsing and that companies are paying for their insistence on leaning into a scheme that many can see through as ultimately prioritizing nickel and diming customers. People love seeing these greedy companies who've placed so many of their eggs in the NFT basket for the sake of exploiting customers for monetization purposes, having their long-term hopes and ambitions for NFTs just completely and utterly backfire on them. And so, yeah, you can see these tweets and memes speak for themselves. And you can see how viral Jesse Felder's tweet here highlighting the collapse of the NFT market has gone viral already with over 25,000 likes, almost 27,000 likes, and scrolling down, plenty of people also celebrating, save for a couple crypto bros who are trying to defend this and paint a more positive picture. Plenty of people highlighting how this all comes as no surprise because NFTs are absolutely worthless in the real world. It'll always and forever be hilarious that all these corporations that threw their hat into the NFT race, tarnishing their reputations in the process, did it all for a market that at its peak only saw a couple 100,000 weekly transactions. Others making fun by selling this chart as an NFT and then somebody else also selling this JPEG as an NFT. When you've got this many people celebrating the downfall of NFTs, and when reports of NFT downfall tends to go viral, maybe it's time to reprioritize. Maybe it's time to consider the possibility that maybe NFTs suck, nobody wants them, and leaning into them is a bad idea in the long term, both for your reputation as a business and your finances, as these investments don't seem like they're really going to pay off based on at least current trends. And also based on the fact that these non-fungible tokens are in fact fungible, hackers have very easily stolen thousands, hundreds of thousands, millions of dollars worth of NFTs. This is a report from back in March 2021. Even early last year, we've been hearing reports of hackers stealing thousands of dollars worth of NFTs, and those numbers would only increase as the worth of NFTs or how much people were spending on NFTs, all of that increased. Here's the Indian Express reporting how there's a hacker who stole $800,000 worth of NFTs through Discord, published on March 2022, just a year later. Here we have another article from February 2022 reporting how $1.7 million worth of NFTs were stolen on OpenSea. Next up, we got this article from News Outlet Protocol, published back in January of 2022, reporting on the theft of Bored Ape Yacht Club NFTs. To be more precise, $2.2 million worth. And some of these heists have resulted in hundreds of millions of dollars of cryptocurrency and or NFT stolen, like this heist against Axie Infinity that resulted in a theft worth more than $600 million. Now, some entities have been successful in being able to recover the stolen NFTs, others not so much. Regardless, when stuff like this is happening so commonly, do companies really want to pretend like this is a safe and fun environment? I mean, of course they do if it'll make them money, similarly to how companies will pretend that loot boxes aren't gambling and are instead like Kinder Eggs, fun surprise mechanics that are completely ethical, and all this BS. All it is corporations just lying to customers with propaganda to convince them to participate in a scam that will ultimately benefit and fill the pockets of corporate executives and rich folks who are able to partake in this landscape without much of a financial risk. They want to reap the rewards of this buzzword that, when they're asked, how does this technology ultimately benefit us as customers, they're never able to provide an adequate response because they don't actually have a response. And when they do, they'll keep details vague, or they'll say, oh, you'll see down the line, we'll let you know. But it's like, if you wanted positive optics surrounding NFTs, then you would have already told us what's so positive about all of this. But the fact that they still have nothing to say on that front is indicative of a landscape that is clearly not for us. It's for the corporations. And it's all music to my ears to hear about just how much difficulty companies are having normalizing NFTs, and companies are seeing more and more that promoting NFTs is a liability more than a benefit, given the amount of backlash that tends to surround NFT announcements. So yeah, the hope is that this trend of a collapsing NFT market continues until the NFT market is gone forever, but I suppose only time will tell how all of this will play out. Until then, let me know in the comments below what your thoughts and opinions are on the latest reports surrounding the state of the NFT market and how you foresee the future playing out. And to be further updated on all things gaming news, reviews, and discussions, stay tuned right here on Young Yeah. I'll see you guys next time. Young out.